Seconds out, have we got a belter of a crypto bout for you? On the fight card today, India squares up with a right hook of crypto income tax. Has wash trading got NFTs on the ropes? And will regulation spell lights out for crypto? Let's get ready to rumble! Hello and welcome to your weekly helping of delicious crypto quizzing and decentralized debate. This show is all about giving you what you want to know, so don't hesitate to give us a like, add your comments and subscribe. Joining me is Canada's most exciting financial phenomenon since the gold rush. It's John Doe.
What's up, Tom?
And you are definitely in Canada, John. You haven't got your usual moose behind you.
Oh yeah, not this week, but I'm here, live and direct.
And here in London is our crypto god this week. He is head of trade body Crypto UK. It is Ian Taylor. Ian, welcome to the show. You're a parliamentary lobbyist. Surprised with all the shenanigans going on in government at the moment. They have time for anything else?
Yes, it's never a dull day when you work with folks at Westminster. Always a new story to get into.
Now, we're going to be talking regulation with Ian later in the show, but first, let's get into the news. First up in the news is the fact that a bridge between Solana and Ethereum got exploited and hacked this week with over $320 million. It's another setback to Solana in terms of security issues. Ian, what were your thoughts on this?
This is large. I think it's the fourth largest one according to Elliptic behind Mt. Gox, which was 470. And then the largest was the Polychain hack, 600 odd million. It's exciting though. The positive is the industry is building out the infrastructure for Web 3.0. The decentralization of the internet is moving at light speed. And we didn't have these bridges and connectivity across chain a year or so ago. So there's a lot of work going on. And with that will come these exploits. And they are increasing quite exponentially. I do believe also Elliptic reported that it was approximately 12 billion in hacks, whether that's rug pulls or security, cyber resilience issues, exploits. That has increased tenfold from the year previously. So again, this is something that policymakers will be looking at to protect consumer harms.
In other news, India seems to be finally warming to crypto. Here's India's finance secretary on Bloomberg.
Crypto assets, we don't call them cryptocurrencies, but crypto assets are currently neither illegal nor are they encouraged. So they are in a sort of gray area. They're not illegal. I mean, it's not illegal to buy or sell crypto assets in India, and it continues to be not illegal. But we've now put in a taxation framework that treats crypto assets the same way that we treat winnings from horse races or from bets or from other speculative transactions.
So just to be clear, it seems to be not illegal, in case you didn't get that. I think they've introduced a whopping 30% tax on crypto. Ian, what are your thoughts on this?
Yeah, it's an interesting one, India. It does seem that they are flip-flopping between policy decisions. We saw last year the central bank suggested banning the sale of crypto. We work naturally with other trade associations globally, sharing knowledge, resource, developing a joined up and coherent approach. So these folks in India, they're called the Blockchain and Crypto Assets Council. They're part of the not-for-profit of the Internet of Mobile Association of India, managed to get this batted back. So they took all their lawyers to court in India and got the central bank to repeal that. And now we see this 30% tax on crypto assets. They consider it to be gambling, which is interesting because there's a lot of inconsistencies across jurisdictions because the UK HMRC specifically considers crypto assets to be property, not gambling, because gambling proceeds in the UK are not taxed.
And in addition to that, there's potentially a CBDC on the way next year in India as they look to roll out a digital version of the rupee. Now, in other news, John, what have you got for us over in the US?
Over here on the West, we have something happening interesting is that Bitcoin could potentially be accepted as legal tender in Arizona. And I don't know if this is against the US Constitution, but there is a senator that should put a bill in that so that Bitcoin can be accepted for a payment of debt, public charges, taxes, basically use Bitcoin just like how El Salvador did. So it'll be interesting to see where this goes if other states also join in on this proposal. But right now, it's still a little bit far into if this will actually come into motion.
Really interesting to see. And I think the US Constitution doesn't allow states to create their own legal tender. So it'd be very interesting to see how they see Bitcoin and cryptocurrency in the state of Arizona.
It could start a whole movement with all the states coming together. That could just bring enough awareness, at least.
Very good. And our last story is from Facebook, now known as Meta. They have sold off their digital currency efforts, DM, but they haven't given up on crypto. They have registered and filed company documents stating that in Brazil, they are going to start working on crypto services, including wallets, trading, and exchanges. Ian, did you see this? Is this a good move?
I honestly wouldn't know whether to say it's good or bad, but what I can say is, to put my head above the parapet, is it was bad news for the whole crypto industry when Facebook announced the launch of Libra some years ago, which they rebranded as DM. I guess they like to rebrand quite regularly. But this really sparked policymakers' interest because a platform such as Facebook, with the numbers of users it has and the reach it has, starting to issue a private stablecoin really caused concern amongst central bankers, governments in terms of stability of financial systems in their jurisdictions. And so what we've seen is different jurisdictions looking at how to regulate stablecoin issuers. They caused this massive focus on the industry, and now they've just decided to dump this product, and probably it became too much of a regulatory risk for them. But yeah, I think a lot of people in the industry will be like, what the heck?
Very good. Now it's time for chapter and verse from this week's Crypto God. Ian, great to have you on the show. Let's start by understanding a bit more about Crypto UK and what you do.
So Crypto UK is a trade association. We do exactly what trade bodies do, which is to advocate for fair, balanced, proportionate regulation. We focus on the UK. Naturally, we work with other trade associations overseas and intergovernmental agencies as all countries are grappling with the issues on the ground. We have 100 members. Those members include native crypto businesses such as exchanges, custodians, but we're starting to see an increase in interest and adoption from institutional players, your traditional card issuers, payment service providers, financial institutions, accountants, etc. We work with OECD, HMRC, FCA, really to attack the issues. And the issues right now are consumer harms. We've seen lots of vulnerable people be scammed in the UK in the last couple of years. How do we fight financial crime and economic crime? We try and develop new standards for how the industry should operate, whether it be accounting standards or taxation standards. But also our main thrust is to really support the government, members of parliament and peers in the House of Lords to educate them as to the benefits that we see, whether it be improvements in financial market infrastructure, whether it be improvements in the payments sector, or indeed improvements in access to wealth and financial inclusion and financial literacy and education.
And where would you say we are in the UK in terms of the government with understanding crypto and getting to grips with it? Is there a wide understanding within our government, or are we at the very beginning?
We're at the very beginning. We are so far away from where we would like policymakers to be, and that's in all departments. When we formed an all-party parliamentary group last month, in fact, specifically for this reason. And when we had our inaugural meeting, we met a whole cohort of MPs and peers, and the message was loud and clear. We need education. They don't even know the difference between a payment token, a utility token, and a security token. So that's what we're dealing with at this level. So we have a long way to go, but we're working tirelessly with our team to ensure that the government are well armed, well educated with the facts, because if they're not, then they're not going to write balanced and proportionate regulation. And if they don't, that'll stifle innovation here in the UK.
Yeah, exactly. Well, I mean, this is the big thing, isn't it? How can you regulate something you don't understand? It's very, very difficult. And we've seen that in the States as well. I mean, where would you say we sit globally? Do you have a good appreciation of where the UK is in comparison to the US and other countries around the world?
So versus some jurisdictions, we saw in Singapore, they recently just issued a wholesale ban on advertising, mass market advertising to the retail sector. The UK has gone for a slightly different approach where you have to be declared a sophisticated investor if you want, as a company wants to advertise its products in crypto to the retail space. So there's differences. UK is not perfect. It could be better, but at least it hasn't banned crypto.
Just to sort of loop in the doomsayers, claiming regulation is going to be hugely negative. Could regulation kill crypto?
Well, it can certainly have a huge impact. Now, if you are a decentralized application, you could probably argue that I don't have to adhere to regulation because our organization is decentralized. But what's the definition of decentralization? Something isn't born decentralized. There has to be a central group working towards a common end. But we do see, for example, the likes of Ethereum, we've had quotations from the SEC that started off perhaps as a centralized organization, but is now decentral. So that is an interesting one. And we spoke about the wormhole hack that happened this week. We've seen other attacks on decentralized applications by users, or they probably wouldn't call themselves hackers, but they exploit liquidity pools and withdraw funds from the protocol, and then walk away saying, well, code is law. I exploited your weakness. I didn't steal from you. So there's an interesting debate that's going to play out in court. And I don't know what the judge will declare, but I would assume, and I liken the example to, okay, if I walked into a bank and the bank teller's bending over and the security camera was off and the vault was open, oh, I exploited a weakness. Here's a bar of gold, I walk out. That is just not going to fly with the judge in a court. So I think we need to be mindful that regulation is here, it's coming, and please do engage with those people like ourselves that are trying to ensure that that regulation that is coming down the pipe doesn't stifle the innovation.
Thanks, Ian. Lots of great input and food for thought there.
Been a pleasure.
Now, it's that point in the show where we get completely fact up. Oi, oi, I'm talking stats, charts, and the markets. Okay, so let's start with the fact we've been in an 82-day downtrend now, price-wise. We've had a little bounce, and obviously the big question is this the start of a recovery, or are we going further down? In the markets at the moment, there is a short bias with more leverage opened on shorts as opposed to longs, but there's a couple of differences to previous bear markets. And if we have a look at the next chart, we can see we have a continued increase of the number of addresses with a non-zero balance that has continued to rise while the price has gone down. John, what have you got for us?
Okay, let's dive right in and I'll show you exactly what's happening. So here is Bitcoin's weekly chart we're looking at. In that one video we were talking about where we've seen Bitcoin falling for the most consecutive weeks was back here at the end of 2021, November, December. And if you look all the way back even further than that, that has not happened since back in 2017, which marked the end of the bull cycle. So if that's repeating, then we possibly are seeing that happening again. But the good thing is this time around, the on-chain data is bullish that we just reviewed, And as well, if you look where price is finding support right now, it is at a much higher level, up at around $30,000. So we're going to see Bitcoin potentially go test those lows again at $30,000. But the bad news is, if that does break, then we will head down towards that $20,000 and maybe even just see that previous high from 2017 down here at about $20,000 for Bitcoin. But now here, if you look at this lower time frame, let's say the daily chart here, you can see Bitcoin is extremely oversold because it's been trending down consistently for about 80 something days now, we said. So we could see some sort of relief bounce, or bounce to at least test those highs once again this year. But as long as we can find some sort of support similar to like we found back in June and July, then we can see Bitcoin either right here is the critical level for a breakdown, head down towards a previous $20,000 level if 30K doesn't hold, or we get that bounce here and that pushes us towards testing the highs, which could even give us a new all-time high for Bitcoin later on this year. But we will make sure we're keeping you in tune on that. So that's what's been going on the Bitcoin weekly chart. Downwards price action dragged out a bit, but hopefully soon we see things switch over.
Brilliant. Thank you, John. Now it's survival of the fittest in the crypto Thunderdome. Let's meet our digital Mel Gibson in the shape of Coin of the Week. This week's Coin of the Week is Ripple. Ripple is a technology and cryptocurrency that is focused on payments, settlements, and transactions across the globe. It aims to enable faster, more efficient, and cheaper transactions globally. And its native token XRP has been in the headlines recently due to a lawsuit with the SEC. It has some celebrity followers and supporters in the likes of Snoop Dogg, Bill Clinton, and Madonna. Promoted it recently in Malawi as a way of giving back to charitable causes.
Thank you, Ripple.
Guys, what do we think? Ian, maybe start with you.
Yeah, well, I'm not super close to the case with the SEC, but Ripple aren't alone in the SEC's targeting and enforcement action. They're going after Uniswap, as we understand it. You know, they've, as I said, they were looking at Ethereum, but actually did state that Ethereum is decentral enough now that they didn't consider ETH to be a security. And I believe that's part of the defense. So we'll be interested to see how that plays out, and if there is any enforcement, what sort of fine will come down.
John, what about you?
If the outcome of this lawsuit is something like, oh, XRP token, it is a security, then I think there will be a lot of other crypto projects in that same boat.
Definitely. It feels like a big moment, whatever happens in the decision there. And we will await to see the result of that fairly soon. Now, circling before us, there's fear, uncertainty, and doubt. There's FUD in the water, my friends. This week's FUD is wash trading. Now, regarding NFTs, wash trading is the process of users buying and selling their own NFTs and thus artificially pushing the prices up. In the news this week was LooksRare. Analytics firm CryptoSlam alleged that almost 8 billion worth of trading on the LooksRare NFT platform was wash trading, which is a big blow to trust in the NFT world. Did you see this, Ian?
I did, yes. And these types of poor market practices, there is no protections against consumers. There's no market surveillance or market integrity. It just points a picture that the industry doesn't need. In the eyes of the policymaker, it's the one bad apple, spoils it for the rest, that these practices permeate across all market participants. And in my experience with our members, that is not the case. But it's the few that spoil it for the many. And it really focuses the lens of the policymakers on these platforms, and then we'll come after them with either enforcement action or over-regulation.
You know, whatever your thoughts, one of the things about blockchain technology is its transparency. That's one of the biggest strengths that it's got. And clearly, issues like this go completely against that in terms of what it represents. John, what are your views on this?
This does happen across several markets, and for a platform like Looks Rare that's so new, it was most likely easily detectable because it does happen across things like Uniswap, even OpenSea. But on something like this for that much, $8.3 billion worth, that is a large sum to be wash trading on a platform that's so new.
And John, I believe you've made a film about NFTs recently.
Yeah, I did. Talked about how to buy NFTs, what they are, explained them for people to kind of understand just the basics. So if you want to check that out, make sure you do click the link right here.
We'll be back again next week, joined by new guests and more big news. That's all for now.